Interest rates hikes again last week, going up, but what does it actually mean for you and I? Let's quickly check in before 9 o'clock with personal finance columnist Maya Fisher-French. Hello to you, Maya. Always good to have you with us. So interest rates increases gone up. Banks automatically increase the interest on your loan. So how soon after the rate increase is announced are our bank accounts going to get hit?
This is incredibly important, and it's something people don't always realize, is that the interest rate is calculated daily. So it's with immediate effect. So immediately the new interest rate will be applied to your outstanding credit. And obviously this is assuming that you have variable interest rates. So this is where your interest rate is linked either to prime or to repos. But that affects, let's be honest, most of our debt. Home loan, car finance, credit cards, personal loans, most debt is variable and it's going to go up. But what I find a lot of people get confused with is this idea of the daily interest rate. So if you take this the cut last week, not the cut, I wish, the increase last week. I wish. It will only affect the portion of interest from the 20th of May to the 31st of May. So that daily interest will be applied just for those 11 days. So when you get your statement at the end of May, it's going to go up marginally, just a little bit of an increase. Next month, at the end of June, is when you will see the impact on the full month of outstanding credit. And then you'll see your installment go up again. And a lot of people write to me at that point saying, the banks have put my interest rate up twice or my installments up twice. You know, they're cheating me. But no, it's not. The first month is just the portion of the days left in the month that the new interest rate is applied to. So the full effect, you're only going to be seeing at that end of June, on the end of June statement.
Yeah, they're sort of easing you into it. As you said, that you're going to feel the full effect. Tumza actually dropped her head waiting for the end of June. All right, just very quickly, Maya, let's talk about those who are responsible enough, I'm not going to throw my name in here, to have a savings account with those deposits. Do those interest rates increase as well? Give me some good news if you can. And then, of course, those who own property, fixed interest rates or not. So who's benefiting right now, who isn't?
So certainly on deposits, that is more at the bank's discretion, and that is driven a lot more by the demand for deposits from customers. So if banks need funding, they may increase interest rates. They won't link it directly necessarily to prime or to repo. They may actually, so for example, during COVID, when we saw those massive interest rate cuts, a lot of the banks didn't actually drop their deposit rates by the same amount. And in fact, some banks on certain bank accounts actually kept the interest rate the same because they're looking for deposits. So it's a very different market. But obviously, if, say, for example, you took a fixed deposit and for a year, unfortunately, your rate is going to stay the same because that was the agreement. It's fixed for a year. That's the rate we're giving you. But again, because banks knew that the interest rate increases were coming, the economists all warned us about this. You generally did get quite a good rate if you fixed your money. So, but you're not going to get any increases, I'm afraid, if you fixed your rate. And then on, in terms of whether you should fix your home loan or not, I think we've covered this before, but basically the banks have already built in the future rate increases. I just think you've got to, just try and absorb these rate increases currently. Try and fix now. You're going to be automatically paying maybe 1% to 2% more from day one. And when you're calculating on a daily basis, that gets very expensive.
Oh, there we go. Some great advice for those that are either looking to get into the property market or those who are wondering if they should change things now.